The busy fall marketing season has started with equal parts bearish and bullish sentiments. Hi everybody, Colter Brown here from the Northern Ag Network with our monthly livestock report. As we look at just the prices, this cattle market looks a lot better than it did last year, but when we add in the cost side of the ledger, it takes away a little bit of the optimism. Today we're going to talk about some of the livestock sales over the past month here to get an idea of where this market currently sits and then talk about some of the factors that will affect where it's going. The long-range weather forecasts are a lot like the market projections. They're all over the place. The Farmer's Almanac says we can expect a wet and cold winter, but some of the meteorologists are saying it could be spring before the drought breaks. I know a lot of producers have found benefit from pasture, rangeland, and forage insurance, helping to buy some of that high-priced hay. If you haven't looked into PRF, it'll definitely be worth your time. Even if you don't have a policy, AgRisk advisors are happy to help. Visit them at prfadvisors.com to learn more, and we thank AgRisk advisors for their support. As we start diving into our markets, you can see the end of September sure could have done better for the cattle futures. A lot of factors at work here. We're going to start by looking at the fed cattle and then work our way down. Before we even start with the market fundamentals though, we have to look at the broader macroeconomic pressures. Cattle are usually a bit more insulated from outside market pressure, but with rising interest rates, a stronger dollar, falling stock market, and the lowest crude oil since February, cattle certainly did feel the pressure. All but the nearby contract fell more than $2 in the last month. Now, some of the drop was expected as the industry is still dealing with historically large fed cattle supplies. Drought has kept pulling cattle forward, bringing them off pasture early and into feed yards at lighter weights than they'd normally be and a lot more heifers in the mix. It looks like next month we could finally see that on-feed inventory fall below year-ago levels. At some point, the other shoe has to drop, and we have to recognize the tight cattle supplies that this market is dealing with. We keep saying that tighter supplies and adequate slaughter levels will improve the cattle feeder and cow-calf producers' leverage in the fourth quarter and even more so into 2023. Interesting that while live cattle futures fell over the last month, the cash market improved. 2 weeks of stronger cash cattle prices, up $1 to $2 each of the last 2 weeks here. That's more a result of the strong packing pace and packers being a bit short bought early in September. Box beef has come down some. It's been a gradual drop off, but actually these are the lowest box beef prices since March of 2021. Doesn't appear that beef demand is falling apart. We're still shipping a lot of product out, but it seems like retailers may be gaining a bit more leverage. Shifting into the feeder cattle, it's just the opposite picture of corn prices. Corn prices increased as we got forecasts for lower yields out of the Midwest this year, and that took corn back up towards $7 and feeders down to $1.80. Then in the end of September, like we talked about, the pressures from outside markets brought both corn and feeders down. At this point, feeders feel pretty oversold. They're going to have to find a rally at some point, but may run into some additional pressure during the fall run. The yearling marketing time frame, the market has held in pretty well as we look at some of our local markets. At Torrington Livestock, we saw the effects of tighter supplies help prices a little bit, and elevated feed costs did improve demand for heavier weight cattle. 8-weight steers there in Torrington, 176 to 186, 9-weights 171 to 182. For the heifers, the spread narrowing quite a bit. The 8-weights 172 to 178 and 9-weight heifers 163 to 169. For the calf prices, you can see some of the results from the big sale at Ogallala Livestock. Calf prices coming down slightly, but still 5 weights averaging above $2. 6-weight steers starting to dip down in the 190s and high 180s, but still the average there over $2. Typically, late September and early October does enter into the low point for the calf market for the year, just as we see that fall run get started and large supplies coming. However, with decreased supplies this year, that drop in the price may be a little more muted than we normally see. Of course, we're going to be watching these corn prices very closely, but like we say, it is possible the market sees additional pressure. The good news, though, is that calf prices are $30 to $40 a hundredweight above where they were a year ago. Now, on the other side, I don't have to tell you, on a percentage basis, costs have increased just as much, if not more, almost across the ledger, so it creates a little bit of difficulty. But as we look into next year, these tighter supplies should help support cattle prices, and that could last for a couple of years. Now, as we look at the final video sale of the season, Northern Livestock Video held their sale, and again, we saw pressure on the calves. 5-weight steers, though, ranging largely from 202 to 228, 6 weights 198 to 209, 7-weight steers 193 to 203. 1,800 head of bred cattle on that sale, and prices definitely improved. For the bred heifers, the average $350 above last year's sales. Bred heifers there ranging $1,775 to $2,000. The young bred cows $1,750 to $2,050. In determining calf demand and prices over the fall here, some of the factors that we're going to be watching are winter grazing prospects in the southern plains. They're definitely droughted out in Kansas and Oklahoma, where we do send a lot of cattle, so that stocker demand may be decreased. And like we've talked about, these feed costs are definitely going to be a headwind. The national closeout cost of gain average in August came in at $1.33. From 2018 to 20, we saw that cost of gain pretty steady from 80 to 90 cents. But as we look towards next year, CattleFax says early 2023 could see cost of gain $1.40 per pound or even higher. Unfortunately, that's going to weigh on feed yard demand for calves to some degree, but could be offset by these tighter supplies we keep talking about, and could get some help from deferred futures if they perform a little better. And lastly here, September is of course the month for ram and replacement ewe sales in Douglas, Miles City, and Newell. We had some big sales. Now of course those ram sales did struggle a little bit just with the struggles that we've seen in the lamb market over the last year. The high price of lamb at the retail case relative to other meats did eat into consumer demand. That caused lower demand for live lambs, which then equated to lower prices, backlogging lambs in feed yards, and lambs getting overfinished. So it's been a difficult situation. Those lamb prices 40 to 50% lower than they were a year ago. At the ram sales though, the prices were down 25 to 30. So I think that shows the demand there is for quality rams. At the Wyoming ram sale, the average $1,022, top ram at $3,100. In Montana, the top ram at $19,000, overall average $1,275, and the ewes averaging $309. Well, that's going to do it for this month's report. If you're thinking about pasture, rangeland, and forage insurance, again, reach out to AgRisk Advisors. They can help you look at some examples specific to your operation. Visit them at prfadvisors.com. And with that, we'll put a bow on this month's report. I'm Colter Brown from the Northern Ag Network. Have a good one.